the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, October 2nd, 2012. Well, a change of trend today in a candle with a lower high and a lower low. Having said that, however, we have had the market actually close above the previous close. So even though the trend has changed to the downside, it hasn't been strongly supported by the sellers. The sellers were strong enough to test just below the previous low and test just below the 1440 area of important support that I highlighted previously. But the buyers came in solidly to close the market up towards the midpoint level. Now, with the market closing above the previous close and only just, it suggests that the buyers have shown some keenness today compared to the previous day, but we only have a very small body candle, and the small body denotes neither side having any solid momentum throughout the trading day in the net effect between the open and the close. We have a large shadow on the top and the bottom, or a relatively large shadow on the top and the bottom relative to the size of the body, and that represents on the upside downside price rejection and upside price rejection from the lows. It's a day of indecision, and this is an indecisive spinning top, almost a doji type candle, and it's not the type of candle that you want to see when the market changes trend. Significantly, as I've said, 1440 has been that area that's held as strong support, and the market has once again tested to the Tenkan-sen, which has held as resistance now for the past 4 consecutive days, and that is a very, very important area. If we look at how the market's trading, it's closed within the area between the Tenkan-sen and the Kijun-sen for the past 4 trading days as well, and it does suggest a market that lacks any real direction at the moment. In terms of the Fibonacci extension, now that the trend has changed to the downside, we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here we've seen strong price rejection from the 50% and from the 38.2% level, and that's quite significant. It's been on a candle where the sellers have shown no commitment throughout the trading day. They've actually lost commitment, and neither side is closed with control, so it does set the market up for a potential change of trend back to the upside. And in terms of the Fibonacci retracement, we've had rejection from the 61.8% and the 50% level as well. Here we see here we test just below that level, and the market's been rejected quite strongly, so strong potential for a change of trend to the upside. In terms of the trend lines and the trend channels that I've drawn, we have this light coloured blue trend channel that I've drawn where the market is now finding support, and once again today the market has failed to close down below that level. If we do close down below that level, it will mean that the momentum that the trend had in this time frame based on these peaks and troughs is certainly slowing, and then we should be looking to the slower time frame trend line and trend channel to act as an area of potential support for this market, but that may not come into play for the next few days if the market does trend down. In terms of the line here, the yellow line, that's another smaller time frame trend channel to the downside. Once we had these lower peaks and lower troughs in place, we were able to draw the trend line because we actually have a valid downtrend in place, and we now have the market trading away from there, but in a very indecisive manner. Yesterday the market found resistance at that trend line, so let's watch that line for tomorrow's trading. If we do see the market test above there and close above there, that will be significant. It won't necessarily mean that the trend has changed to the upside in the time frame that this trend line represents, but it will mean that the downtrend has lost momentum and warns of a potential change of trend to the upside. So that is a very important level. But also we have the resistance up around the swing high here, roughly around this 1460 level, which on a smaller time frame was a zone of previous support and then has turned into resistance, so it's a very important important level. 1440 is a very important level as well for this market. But in terms of Ichimoku, we have a bullish market in the long term and the medium term time frames. The market is still trading above those indicators, but as we move on and on, the market will come to meet the cloud here, and that's if we do see the market continue sideways, and the cloud will offer very strong support for this market. So if this market doesn't sell off soon, then there is strong support close by within the next week or so. In terms of the Kijun-sen, it is still pointing flat, and the price action is being attracted back towards there, and there is a possibility the market could even test below 1440 and find support there and bounce off, so we do need to be aware of that. But now we also have the Tenkan-sen holding as resistance for this market. We're trading below there, so technically the market remains bearish in the short-term time frame, and the market has been trading below there for the past 6 or so days, so that's significant. So basically a market where the longer-term time frame is bullish. If we see a breakout to the upside above the Tenkan-sen, then depending on how bullish that breakout is, it could be a good sign that the market has potential to trade to substantially higher levels. We do need to watch that. But if we see the market close down below the 1440 level and the Kijun-sen, we could see the market quickly trading down to 1422, 1415, and then even down to the round number 1400. But we do need to be patient and wait until this congestion that the market's in resolves itself.